Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend as part of our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Monday, May 4th, 2020. For this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. Today we were up 0.42% on the S&P 500 and closed at 2842.74. What we're starting with is a 15-day chart of the S&P 500 where each candlestick represents 15 minutes of trading. And what we can see here is for today, we gapped down at the open, spent the majority of the day in the red, and then late this afternoon finally went into the positive and closed towards the highs of the session. But in spite of today's positive number and the fact that we, were able to close near the highs of the session, it is important to note that for the last 3 weeks, as we can see here on this 15-day chart, so it's 15 trading days, so it is the last 15 trading days, including today, we can see that basically we're trading exactly where we were 15 sessions ago. Okay, so we've been predominantly going sideways for the last 3+ weeks with some trading as low as just below this 2730 area, and just for a few minutes we traded above 2950 last week, but of course couldn't hold it. So for the most part, we've been going sideways here for 3+ weeks, and it's even easier to see on a weekly chart. So now what we're looking at is a 6-month chart of the S&P 500, where each candlestick represents 1 week of trading. And we also have the Fibonacci retracement overlaid on top of this entire move that we've had from February 19th through March 23rd, and we'll come back to that here in just a minute. But we can definitely see here on these weekly candles that, and this is just today, so far this is just this week, so this is just Monday, May 4th so far. But what we can see here is we've closed negative for the last 2 weeks, and this weekly candle here is the only time we've been able to close above 2850 from where we've hit our lows so far on March 23rd. And of course, nobody knows whether this is going to be the ultimate low of this downturn or not. Everybody has their opinion, but nobody knows for sure. March 23rd may represent the lows of this entire downturn, or it's completely possible it will roll over and go even lower. We don't know. Nobody knows for sure, okay? But what we do know is that over the last 3+ weeks now, we've been trading sideways to slightly down, and so this rally, if you will, that we had has kind of ran out of some steam, all right? So the question now becomes, will we just go sideways and build a base here, and then can we go higher from there? Or is this a stalling action where we're going to roll over and go lower? Nobody knows for sure, so we're just going to have to keep our eye on this, okay? So 2850 at this point is the major overhead resistance point, and of course, the higher the market tries to climb from here, the more overhead resistance we will run into. 2800 and just slightly below that, where this 50% retracement level lies at 2791.92, in that area right there. This will definitely be an area we will want to keep our eye on. Again, that's where this 2800 comes in. Okay, 2800 and slightly below is where this 50% retracement lies. So looking at the Fibonacci retracement of this entire move, what we know is that we did bump up against, last week, we bumped up against this 2950 area, which is pretty much where this 61.8% retracement lies. And right now we're trading kind of in that zone between the 50% and 61.8% retracement of this entire move, okay? And we're stalling out. So again, the question becomes, can we stay above this 50% level, which again is around that 2792 area? Let's just call it 2800 for easy math. So can we stay above 2800? And can we eventually get back up above 2850, start to close on a regular basis above 2850? Only time will tell. But there's still a lot of danger in these markets, guys. So please don't get too comfortable and too confident. If you are long this market, keep your stops tight, and we'll keep our fingers crossed. But it would not surprise me to see this market roll over and go lower from here. The only question is, how low do we go, right? If indeed we do start to roll over here. But for now, we're going sideways to slightly down. So just keep that in mind. I hope you've enjoyed today's session. Please remember to subscribe to this channel for ongoing stock market education. Also, give me a thumbs up on this video and check out some of my other videos. I have a lot of very educational videos about the stock market on this channel. Also, if you are a financial advisor or an individual investor that manages any of your own money, including in your 401k, your 403b, your IRA, or of course your trading account, I would encourage you to take a serious look at Simple Market Signals, which is my personal risk management model that took me over 20 years to develop, and I'm now making this available to the public. For those of you who would like to learn more about how Simple Market Signals can help you in both up and down markets, here is some additional information. As part of the Simple Market Signals model, there are two powerful indicators. There's a risk-based indicator and a trend indicator. As a subscriber to Simple Market Signals, you will receive information on what the risk level is in the overall stock market, as well as what the trend direction is in the overall stock market. So this really, really helps. The way we disseminate the signals to our subscribers is via our weekly emailed newsletter. So within the newsletter, every weekend, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the early bird indicator, the trend direction signal on the overall U.S. stock market. You will have market and sector performance information on multiple time frames. You'll get market commentary and a weekly recap of what happened in the market. You'll have technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information in this newsletter every weekend. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents a day. It's billed monthly on your credit card. There's no contracts. You can cancel anytime, and your first 2 weeks are free. Now let's recap what you get with your subscription to Simple Market Signals. You get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there is a major signal change or direction change, we're not going to wait until the weekend to get that information to you. We will send out a special midweek update when necessary to keep you up to date as to what's going on within the model. And the best fit for a subscriber for Simple Market Signals is somebody that has at least a 6 to 8 week time frame or longer. So if you're a long-term investor, you're going to love this. If you have at least a 6 to 8 week time frame that you focus on with your trading and investing, you're going to love this. If you're an ultra short-term 1 or 2 day trader, kind of a day trader, or somebody that trades within a week, Simple Market Signals might help you a little bit. But the reality is, the people that are going to benefit the most from a subscription to Simple Market Signals are those people that have at least a 6 to 8 week plus time frame that they're focusing on. And if you want even more information on Simple Market Signals and some of the strategies that you can use on the various signals, this is a very in-depth video that I will have linked in the description box below this video, along with a bunch of other videos that you may want to explore if you need additional information on Simple Market Signals before you subscribe. Also, keep in mind that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. And to subscribe to Simple Market Signals, all you have to do is go out to the website that you see here, https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that simple.